Alright, good day everyone. In today's video tutorial, I'm going to be showing you some things about the market structure. So I want to talk about the market structure. So it is very important as a trader, knowing your market structure before you place a trade matters a lot. Okay, so just in case you want to trade and you open a chart like this, you are seeing some series of candlesticks, higher highs, green candles, red candles, and all that. You are just confused. You don't know the area of value at the point where you place your trade. Now, on this trading view chart, we are going to be looking at this Euro USD. We are going to trade on Euro against the dollar. Okay, so I'm going to show you a sample of how you know if you are to buy on this trade, sell on this trade, or you stay out of the market. Okay, now as you can see now, this is a 3-hour chart. Okay, now what is a market structure? A market structure tells you what the current candles or the price is actually saying. Okay, it tells you if you are to buy, to sell, or to stay out of the market. So on this chart now, let us see how we can pinpoint some values, knowing if the market is actually in an uptrend or a downtrend. Now I'm going to use one trend line tool to figure out something. Now let me draw these points. Let's see if I'm going to get the touches on the support level. Remember, support is the horizontal area on your chart with a potential buying pressure, and the resistance is also the horizontal area on your chart with a potential selling pressure. Okay, so now this line I drew now is acting under the support, otherwise known as demand. Okay, as you can see, the price respects this trend line. They all touches for this trend line. Can you see that? Right here we have a series of higher highs, higher lows, higher highs, higher lows. So what exactly do I mean by that? So this is what I'm trying to say. This is what I mean by higher highs and higher lows. So if you can see from this point, this beginning here, we have this one is called higher highs. This one is higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. Can you see that? Now this price seems to respect the support line. I don't know if I'm communicating. So looking at this picture now, what does this tell you? This tells you that the market is clearly in an uptrend. It tells you the market is what? Clearly in an uptrend. If you notice, the trend line is ascending upward. Okay, on the higher time frame. Because if you want to place a trade, go back to the higher time frame. The higher time frame gives you a clearer and a bigger picture on what the market, on what the overall market is saying before you place a trade on the lower time frame. So doing this now gives you a favorable risk to reward. And right here on this same 3-hour chart, let's use one rectangular block to mark a previous resistance which turns into support. So you can see right here, this price here respects the resistance level, isn't it? And it broke out of this resistance, still going higher. Okay, this tells you that the market is actually what? Ascending and not descending. Okay, on the higher time frames. So doing all this now gives you a clearer picture on what the market is saying. So by figuring this out, I can easily go back to my lower time frame where I am expected to place a trade. So this is the lower time frame. This is the 1-hour chart, as you can see right here now. This is the current market price on the Euro USD, 1.17163. Okay, now this market here now, this place seems to be consolidating. Are you seeing it? This point here seems to be what? Consolidating after making a massive trend from this place to this place. Here seems to be what now? Consolidating. I cannot place a trade like this because the market now is in between the resistance and support. Okay, but as it is now, it's approaching the resistance. You understand? So before you place kind of trade, you have to wait for this current candlestick to see if it will still go above a bit, approaching this resistance line. So if it gets to this resistance line, are you following? As you can see, it gives you a clearer picture. Are you following? To tell you what to sell. You understand? Because you can't buy from here, because if you buy from here, you are trading at a higher margin. You get your risk to reward will be too high. Okay, so trade at a very low risk to reward, so you make a potential massive gains, then minimize your loss. Okay, so if this candlestick approaches this resistance line, you understand, so it gives us a favorable risk to reward. So when it gets here to this point, 1.1726276, I can just use a tool. For instance, I'll use a tool, a short position tool. Short position, place it down here. Can you see that? This is the red rectangular block and this is the green rectangular block. So the red block is actually where you to set your stop loss. Are you following? So the distance between the width on this red block to the entry point is your stop loss, and the distance between this entry point and this green block is your take profit if you are to sell. Because if you're selling, you are expecting the price to come or to fall down, to drop rather. Okay, so now if I'm to place a trade on this particular area now, okay, let's assume this is where the price is 1.17276, right? So I need to reduce my risk, bringing down this rectangular block. Okay, don't put your stop loss at exactly this resistance, because there is every tendency that the price might hit your stop loss and still go down to your favor. So instead, take your stop loss a bit above the candle, okay, so that it gives the trade some room to breathe. Do you understand? So doing this now gives you a clearer picture. Then why your take profit should be bigger than your what? Your stop loss. Of course, as a business minded person, your profit should be more, are you following, than the losses. Okay, so doing this now gives you an edge in the market. Are you seeing that? So once the market now approaches this resistance level now, I can easily place my trade. So once the trade now is being placed, it gives me favorable risk to reward placing this trade. So even if the trade goes against what I predicted, if you notice, calculate the number of pips from the entry point down to the rectangular block where I set my stop loss. I'm not going to lose too much because I traded at a favorable risk to reward. Can you see that? Set your stop loss a bit above these candles in order to avoid some slippage. Is that understood? So that's it. So this market can still drop down if it's triggered from here. Okay? Before you know it, you make massive gains. So that's it. It's as simple as that. So with all being said and done, I think I'm going to stop here. Know your market structure. Your market structure tells you what to do before you place a trade. It tells you if you are to buy, if you are to sell, or to stay entirely out of the market. Okay? It is very, very, very important. Mark all the supply zones, mark all the resistance zones, then go back to your lower time frames before you execute the trade. So that's it. So with all this being said and done, I'll come to the end of this video tutorial. If you have any questions, drop it down in the comment section, and don't forget to subscribe to my channel for more trading tips. Thank you. God bless.